welcome all to another quarterly market update from the team at Sharon Partners. And as always, I'm joined by Dr. Steve Garth, virtually again in Sydney and from his home in Manly. But Steve, I know 2020 was a big year for financial markets and a difficult one for a lot of reasons, but I think you might have some good news for us in terms of the performance of markets in the last quarter. Can you give us a bit of an overview there?
Yeah, thanks, Billy, and welcome to you and welcome to everyone listening today. You know, it's been an incredible quarter. It's actually the best December quarter for the S&P ASX 200 in its history. And you can see that in the chart that we've put up now. You can also see that it's been a very good quarter for emerging markets. They've been lagging for a while, but they've really come back in the quarter. And you'll also see that REITs, they're the real estate investment trusts, they've had a really good quarter too. But of course, a quarter is a very short period of time. And given it's the end of the year, if we move to the next slide, we have a look at performance over the entire 12-month period. And a couple of things to pull out here. First of all, you'll see cash, as we know, in Australia is returning very, very low amounts, about 0.1%. Over the year, but you'll see that the bond funds, both Australian bonds and global bonds, have had pretty good performance of around 3 to 4%. So quite significant outperformance of the bonds over cash, even though yields are very low. You'll see that the Australian market has just sort of come flat for the year. It's a little bit up by just over 1% for the year, still about 7% off the peak where it was in February 2020. Again, good performance for global markets and emerging markets done really well. You'll see over the year, and there's no surprise here, is that the real estate investment trusts, which are basically commercial property offices and the like, they've actually done the worst, obviously being affected by the pandemic.
Thanks, Steve. We saw there that global markets have outperformed the domestic share market. I know you spoke 3 months or so ago about the influence of some of the big tech companies in the US and their strong performance and how that's helped drive performance in the US. Can you give us a bit more insight into that and how that's finished the year?
Yeah, Billy, the chart I've got up now, we have seen this chart before, but it's worth putting up again because it's just such a remarkable chart. It shows the performance of the ASX 200 and showing the American stock market, the S&P 500, doing a little bit better, performing similarly, but doing a little bit better. And if you look at the reason why it's doing better, it's that next chart I've got up showing the performance of the FANGs, the Facebook, Apple, Amazon, Netflix, and Google, and other stocks, including Tesla, which, by the way, was up 750% for the year. But you can see with the FANGs, they're up 100% for the year. They're a big part of the US market. They're about 25% of the US market. And that's really driving performance of not only the US market, but really their large growth stocks. And it means that over the year, and we'll see this a little bit later, that the growth stocks have been doing better than value stocks.
Thank you, Steve. You mentioned there that the outperformance of growth over value and value, and that discussion will be a familiar one for Sharon Partners clients. They will have heard their advisors speak about the strategic tilts in the portfolio to smaller companies and to value style companies over growth companies. Can you give us a bit of an indication and a bit of an explanation as to how those different positions have played out over the preceding 12 months?
Yes, well, as the audience probably heard me say before, it's been quite a run for growth stocks over the last couple of years. In other words, growth stocks have beaten value stocks. And when the pandemic hit, that actually helped growth stocks even more. They're already doing really well. And in the pandemic and the whole work from home culture, of course, large technology stocks and Netflix, Apple, for example, did extraordinarily well. But if I now put up the performance in the quarter, you'll see a big reversal here. So I'm showing the Australian market over the year over the quarter on the left-hand side, up, as I said before, over 13%. And next to that is the Australian small companies. They've performed in line, but Australian value stocks have done much better than the broad market. over the quarter and outperformed growth stocks, which have done worse than the market. So a big turnaround in the quarter. And many people have said this is a little bit at the end of the work from home trade and a reversion to the let's go out and start living again trade. So a lot of those stocks that were really beaten down during the pandemic have found their feet in the last quarter. And, let's hope it continues. No surprise, again, when we were looking at the performance of the FANGs, the large growth stocks, when you look over the whole year, here you can see, I'll put the year next to the quarter, and you can see a bit of a change. There's a really good small cap premium over the year, and that's really helped the Sharon partner portfolios. But the value over the year, that's a little bit negative, so much less than the growth part of the stocks, which have outperformed. And you see the same thing when we look at this next slide, which is the performance globally. Looks very similar. Again, small companies have performed pretty much in line with the global market. Global value stocks have really underperformed the market over the year. And in other words, global growth has outperformed the market over the year. And you really can put that down to the performance of the FANG stocks.
Thanks, Steve. Informative as always, and thank you everyone for joining us for another quarterly update from the Sharon Partners team and Dr. Steve Garth. We look forward to seeing you up in Brisbane soon, and thanks again.
Yeah, thanks, Billy, and thanks everyone. Bye-bye.